Imagine waking up one morning, opening the financial news and seeing the headline, "The Chinese Yuan surpasses the US dollar as the world's #1 reserve currency." Sounds like science fiction? Maybe. But remember, just a few decades ago, nobody believed China would rise to become the world's second-largest economy this fast. And today, the currency war between the USD and the CNY, the US dollar and the Chinese yuan, is no longer just about exchange rates. It's about geopolitics, finance, and global power. So, who's really winning? Is the dollar still the unchallenged king, or is the yuan quietly rewriting the rules of the game? In this video, we'll dive deep into the history, the current reality, the hidden strategies, and the possible futures of this epic financial rivalry. To understand the US-China currency war, we first need to revisit the power of the US dollar. After World War II, the Bretton Woods Agreement placed the dollar at the heart of the international financial system. The dollar was pegged to gold, and other currencies pegged to the dollar. Even when the US abandoned the gold standard in 1971, the dollar retained its status as the world's anchor. Today, nearly 60% of global foreign exchange reserves are held in US dollars. Over 80% of international trade involves the dollar. And nearly all strategic commodities, oil, gold, wheat, are priced in dollars. In short, the dollar isn't just money, it's a tool of power. The US can print money to fund its massive debt and spending, yet still maintain global trust. No other nation has this privilege. But since the early 21st century, China has emerged as a challenger. With its meteoric economic growth, Beijing has set its sights on turning the Chinese yuan, CNY, into a true international currency. China's strategy has multiple layers: expanding trade in yuan, signing currency swap agreements with countries so they can trade directly in yuan instead of dollars. Exporting capital, the Belt and Road Initiative isn't just about infrastructure, it's about exporting the yuan into global markets. Building financial hubs, Shanghai and Hong Kong are being positioned as yuan-denominated trading centers. Digital currency as a weapon, the digital yuan, ECNY, is one of the world's first national digital currencies, giving China a head start in the future of money. And in 2016, the IMF officially added the yuan to its basket of reserve currencies SDR, alongside the dollar, euro, yen, and pound. Symbolically, that was a milestone. Let's look at the hard data. 60% of global foreign reserves are in USD. The yuan, only about 2.5 to 3%. On the forex market, the USD is involved in 88% of transactions. The yuan is around 7%. But here's the twist. In trade, China is now the #1 partner for over 120 countries. And increasingly, those trades don't go through the dollar. For example, Russia and China have nearly eliminated the use of the USD in bilateral trade since 2022. Saudi Arabia has openly discussed selling oil in yuan, and the BRICS nations are pushing for alternative payment systems to bypass the dollar. The numbers show it clearly. The USD is still the king, but the yuan is making steady inroads. This currency war is not just economics, it's geopolitics. The US uses the dollar as a financial weapon. By controlling the global payment network, like SWIFT, Washington can impose sanctions on nations like Iran, Russia, and Venezuela. But this has a side effect. It encourages other countries to seek an escape from the dollar's dominance. For them, trading in yuan isn't just economics, it's about national security. China plays a different game. Beijing isn't trying to destroy the dollar overnight. Instead, it's playing a long-term marathon, exporting capital, building infrastructure, and pushing the digital yuan, creating a parallel financial network that stretches across Asia, Africa, and Latin America. But make no mistake, dethroning the dollar is extremely difficult. The yuan faces three huge barriers: limited convertibility. Beijing tightly controls capital flows, making it hard for investors to freely buy and sell yuan. Trust in institutions. A global currency requires strong legal systems and transparency. China's political risks and lack of openness are major drawbacks. Shallow financial markets. US dollar markets are deep, liquid, and transparent. China's yuan-based bonds and derivatives are still underdeveloped. In other words, the dollar rules not just because America is powerful, but because the world trusts America more than China. So what lies ahead in the next 10-20 years? Scenario 1. The dollar dominates. The US maintains its power through military, financial, and institutional trust. The yuan grows but remains secondary. Scenario 2, a multipolar currency world. The yuan doesn't replace the dollar but joins the euro as a co-leader. The world shifts toward a three-pillar system. Scenario 3, a sudden shift. If the US faces a severe debt crisis, or if China fully liberalizes its financial system, the yuan could leapfrog unexpectedly. So, who's really winning, USD or CNY? The truth is, this isn't a 100-meter sprint. It's a geopolitical marathon that could last decades. But one thing is certain, this war impacts your wallet directly. Exchange rates, interest rates, commodity prices, your job prospects, and your investments all are tied to the balance of power between the dollar and the yuan. So what do you think? Will the US dollar hold the throne for another 50 years, or will the Chinese yuan rise as a new global star? Share your thoughts in the comments, because your perspective is part of this global conversation too.